Hello everyone, welcome back to Stock Market Meridian. Today is 22nd July 2026 and you're watching today's post-market report. Let's begin with today's market action. Indian markets opened with a slight gap down today and continued to decline throughout the session amid high volatility. By the end of the session, the markets closed firmly in negative territory. The Nifty 50 fell around 0.8%, while the Sensex declined approximately 0.9%. One of the biggest reasons behind today's market weakness was the sharp rise in crude oil prices. Brent Crude crossed the important $90 per barrel mark and continues to trade above that level amid ongoing tensions in the Middle East. Higher crude oil prices remain a major concern for India because they can increase import costs, inflationary pressure, and pressure on the rupee. Coming to sectoral performance, only the FMCG and auto sectors managed to stay mildly positive. Almost all the remaining sectoral indices closed in negative territory, with several sectors witnessing significant declines. Now, let's move to the major geopolitical developments. Tensions in the Middle East continue to escalate. The US military has reportedly carried out its 11th consecutive night of bombing operations against Iranian military infrastructure, coastal defense systems, and missile facilities.
US Defense Secretary Pete Hegseth stated that the direct cost of the military campaign against Iran has now surged to approximately $37.5 billion. Meanwhile, US Secretary of State Marco Rubio called Iran's continued attacks on commercial vessels in the Strait of Hormuz unacceptable. He warned that allowing any country to control international shipping lanes could set a dangerous precedent for global trade. At the same time, President Donald Trump warned that US forces could soon heavily target Pickaxe Mountain, a fortified underground site reportedly linked to Iran's nuclear program. However, Iran's foreign ministry spokesperson has denied these claims, saying there is no nuclear activity at Pickaxe Mountain. In response to US threats against its nuclear infrastructure, Iran has reportedly launched retaliatory attacks targeting neighboring countries, including Bahrain, Kuwait, and Jordan, while warning about the possibility of a wider regional conflict. Day by day, these escalations are becoming more serious. So far, global equity markets have shown a relatively controlled reaction to these developments. But if it starts reacting to these escalations, then we can see a bloodbath in the markets for several days. Now, let's move to today's company-specific updates. First, we have Bharat Forge. Bharat Forge has entered into a Memorandum of Understanding or MOU with French-Canadian aerospace company Flying Whales.
Bharat Forge Aerospace and Flying Whales will jointly work on developing, integrating, and manufacturing advanced heavy-lift airships in India for defense and national security applications. At the center of this partnership is the LCA-60T platform. This is a next-generation rigid airship capable of carrying up to 60 tons of heavy cargo. The platform offers vertical takeoff and landing capability, hybrid electric propulsion, and requires minimal ground infrastructure. This could make it particularly useful for transporting heavy equipment into remote and difficult border regions. Potential applications include forward operating base logistics, transportation of oversized military equipment, intelligence and surveillance missions, communication relays, and disaster relief operations. The localization program is also aimed at developing a domestic industrial ecosystem, creating high-tech engineering jobs, and potentially positioning India as an exporter of heavy-lift airship systems. So this is an interesting long-term development to watch for Bharat Forge. Before moving further, if you're new to the channel, don't forget to subscribe. Every morning before the market opens, I upload a detailed pre-market report. And every evening after the market closes, I bring you a complete post-market report covering global markets, company earnings, economic updates, commodities, geopolitical developments, and everything that can impact the Indian stock market. So make sure to subscribe to Stock Market Meridian and press the bell icon so you never miss any important market updates. Now, let's continue. Next, we have Apollo Microsystems. Apollo Microsystems has received a Make-II prototype sanction order directly from the Indian Navy. The project involves the design, development, and prototype demonstration of a semi-submersible autonomous vessel known as Savior ASW. The platform is being developed for persistent underwater intelligence and anti-submarine surveillance operations. Importantly, this potentially expands Apollo Microsystems' role from being primarily a component and subsystem supplier towards platform-level autonomous maritime technology.
Under the government's Make 2 framework, the prototype development stage does not involve development funding from the government. Successful prototype development and naval validation could potentially open the door for future procurement, subject to the applicable Make 2 process and requirements. If successfully commercialized, the project could give Apollo Microsystems exposure to India's growing focus on indigenous autonomous naval and underwater defense technologies. So this is an important development to track over the longer term. Next, we have an important development for the wind energy sector, particularly Suzlon Energy. The government is working on regulations aimed at replacing aging sub-megawatt wind turbines with modern, higher capacity and more efficient turbines.
Union Minister Prahlad Joshi has reportedly directed industry bodies to conduct a 30-day assessment of older wind assets across the country to determine the potential scale of repowering. Many older wind farms occupy some of India's strongest wind corridors, but operate with outdated, lower capacity turbines. Repowering these locations could allow developers to substantially increase electricity generation using existing wind sites, reducing the need for fresh land acquisition. For companies such as Suzlon Energy, this could potentially create a significant long-term opportunity. As one of India's major wind turbine manufacturers, Suzlon could benefit if large-scale replacement of older turbines translates into new equipment orders. Therefore, the government's repowering push is an important development to monitor for the company. Next, we have Paras Defense. Paras Defense subsidiary Paras Semiconductors has proposed an investment of approximately 6,200 crore rupees to establish a greenfield outsourced semiconductor assembly and test or OSAT facility. The Madhya Pradesh government has reportedly allotted around 50 acres of land along the Ujjain-Indore technology corridor for the project. The proposed facility is expected to focus on advanced semiconductor packaging, sensor technologies, optical and optronic systems, wafer bumping, flip chip assembly, and 2.5D and 3D chiplet integration. The project is initially expected to support critical defense and sensor applications while also creating a foundation for potential future expansion into AI chips and high-performance computing. The investment also aligns with India's broader push towards semiconductor localization and Atmanirbhar Bharat. If successfully executed at the proposed scale, this could significantly expand Paras Defense's exposure to India's developing semiconductor ecosystem. Next, an interesting trend is emerging from the paper and packaging industry. First quarter earnings across the sector have attracted strong market attention. Shares of Imami paper surged around 20% following its quarterly earnings. Packaging company Huhtamaki India also climbed around 15% after its results. GK paper gained around 5% amid the broader sector momentum. Now, investor attention is shifting towards GK paper's upcoming quarterly results, which are expected on 27th July. The market will be watching closely to see whether GK paper can continue the positive earnings trend seen across parts of the paper and packaging sector. Now let's move to today's major company results. First, we have Eternal. Eternal reported a good set of numbers this quarter. Revenue, EBITDA and EBITDA margins showed strong improvement on both a year-on-year and quarter-on-quarter basis. Net profit and net profit margins improved on a year-on-year basis but declined compared with the previous quarter. Overall, quarter-on-quarter fluctuations can occur due to business mix and seasonal factors. The important positive is the significant year-on-year improvement across key operating metrics. So overall, the numbers indicate healthy improvement in Eternal's business performance. Next, we have Adani Green Energy. Adani Green Energy reported a solid set of quarterly numbers. Revenue, EBITDA, net profit and net profit margins improved on both a year-on-year and quarter-on-quarter basis. The only relatively weaker parameter was EBITDA margin, which declined slightly on a year-on-year basis. Apart from that, the overall performance remained strong. So overall, Adani Green Energy delivered a good set of numbers this quarter. Next, we have Tata Communications. Tata Communications reported a weak set of results this quarter. Revenue increased on both a year-on-year and quarter-on-quarter basis. EBITDA also improved compared with the same quarter last year. However, other important parameters, particularly net profit and profitability margins, declined. So despite revenue growth, profitability remained under pressure. Overall, Tata Communications' quarterly performance was disappointing. Finally, we have Nestle India. Nestle India's revenue improved on both a year-on-year and quarter-on-quarter basis. However, EBITDA, net profit and profitability margins declined compared with the previous quarter, although they improved on a year-on-year basis. So while the year-on-year comparison remains relatively positive, sequential profitability showed weakness. Overall, Nestle India delivered a mixed to weak set of numbers this quarter. So that's all for today's post-market report. The key risk to watch right now remains the Middle East conflict and its impact on crude oil prices. With Brent Crude trading above the $90 per barrel level, any further escalation, particularly around the Strait of Hormuz, could increase volatility in the Indian stock market. So keep a close watch on crude oil prices and geopolitical developments overnight. I'll see you again tomorrow morning with another detailed pre-market report before the market opens. Until then, thank you for watching. Signing off, bye-bye and Jai Hind.